It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Now, if you want to get in touch, you've got two options. The first, you can leave a recorded message, super easy. The link is below. And the second way is our trusty email address, myrealestatepodcast@gmail.com. We would love to hear from you. And Australia's final pockets of true housing affordability are disappearing, and disappearing fast. Not long ago, there were at least 10 capital city suburbs where you could still buy a house for under 500 grand. Today, Domain tells us that the number has shrunk to just 5. Those last lower-priced suburbs are being discovered and discovered quickly, and once demand arrives, prices tend to move much faster than people expect. The remaining sub-$500,000 suburbs are scattered across the country. 3 are in Tasmania. Good morning if you are listening to us from Tasmania this morning. Those 3 suburbs are New Norfolk, Primrose Sands and Risdon Vale. Russell Island in Queensland is there, and as well as Berrima, which is in Darwin. That is rounding off the list, showing just how limited affordability options have become throughout Australia. I'll get you to just sort of break that down, like Berrima is on this list of remaining sub 500k. Boy, oh boy, have you seen the prices rise where you are in the last few years?
Yeah, absolutely. Listen, we have, after probably one of the more brutal bear markets for any of the capital cities in Australia, our market has really sprung to life kind of 18 to 24 months ago, with a lot of the freestanding houses, pulling anywhere from kind of 30 to 60% gains in the last couple of years.
Danny, let's come to you, because that's Berrima, but I'm sure that there are a couple of other suburbs in Darwin that you want to talk to and perhaps give a little bit of a green light to those listening.
Yeah, absolutely. So, there are still pockets in Darwin, including suburbs like Coconut Grove, which is looking at a median price for 2-bedroom units at $450 and pulling in a decent rental yield. You've also got Milner as well. And there's quite a few pockets still in Palmerston, which is, the neighbouring city of Darwin, even though it's only 8 kilometres away.
And just in terms of the prices around that 500k, how busy is it at the moment?
Very, very busy. So, a lot of the investors are now getting priced out of the house market because the prices have just soared up so quick in just a short space of time. They're now pivoting to the unit sector. And the unit sector has had a considerable growth in 12 months already. Majority of the purchases from the investors had been focused on housing, but now it's the units that still provide a really high rental yield and that sub 500 mark.
I guess you're too young to remember that Barbie launch, back in 1959.
Yeah, a bit before my time, Craig, but my daughter still very much enjoys playing with them to this day.
Oh, come on. I'm sure you took your daughter to go and see that movie, eh?
I did manage to avoid that, and my wife took her along.
Fair enough. Millions of dads did go. All right, let's have a look at Victoria. We're talking about this, which has introduced some of the toughest property taxes in the country, higher land tax and a 4% absentee owner surcharge and expensive rental compliance upgrades. It has made many investors pause, but some are starting to get back into the market.
And it's been a gradual thing, Craig, over the past sort of 3 or 4 years that some of these changes have occurred. And it's definitely led for a period of time a number of investors leaving the market, particularly those that have been in place for a number of years, felt as though they weren't getting the capital growth that they perhaps expected and wanted. And then when some of these extra lags came on top, so that the higher land tax, the extra expectation on minimum standards from a rental perspective came in, it made it quite difficult to continue to hold property, especially then with you put the interest rate rises that came about a few years ago. It was sort of almost like the perfect storm, and it made it quite difficult. But that's started to change because there's been a new wave of buyers coming in, a new wave of investors looking at Melbourne and certainly seeing that it appears to be very good value.
Yeah, because over the last 5 years, Melbourne's property values have grown just over 12%, while cities like Brisbane, you've got the Perth, you've got Adelaide in there, they have surged far higher. And that underperformance really has pushed Melbourne down the affordability ranking and suddenly making Australia's second largest city look comparatively cheap for investors. I can't believe we're actually saying comparatively cheap compared to these other cities.
Yeah, you're exactly right. It very much is. I mean, compared to cities smaller, I mean, Brisbane's certainly been jumping ahead in leaps and bounds for a number of years now, but certainly Adelaide and Perth both well above Melbourne now in that side of things. So they've never traditionally been anywhere near Melbourne from a price perspective. So it is looking quite attractive from a pricing perspective at the moment, and that's what's dragging a few investors out.
New investor loans in Victoria, they rose around 21% recently as buyers recognise that Melbourne is now cheaper than several other capitals, as we've mentioned. Many are simply, and I put this to you, Jared, factoring in the higher taxes into their numbers and moving ahead anyway.
Yeah, that's exactly right. And it makes it a lot easier for new buyers coming in with a positive mindset who can factor in some of these costs versus those that perhaps had them lumped on them and had already sort of set up their expectations as to what their costs were going to be in association with their property. There's obviously going to be unexpected costs that will pop up from time to time. That could be interest rate movements. It could be maintenance on a property. The expectation that a lot of the standard costs would be there has changed. So that made it difficult for existing investors, whereas new ones coming in, as I said before, can make adjustments and make allowances. So they know what the new land tax changes will be. They know what the minimum standards from a rental point of view will be, so they can make sure they buy the right property that is going to meet those. Or if they do need to spend some money on it, they can hold a little bit back from the purchase price to make sure that they're in a position to be able to make those changes.
PropTrack reported a couple of days ago about new data showing unit rents in metropolitan Adelaide have jumped around 10% over the past year. That is pushing the median to around $550 a week. It's another sign, isn't it, of just how tight the rental market remains across Australia. While the extreme price surges we saw in 2022 and 23 have started to cool, there is this other phenomenon, and that is the demand for apartments and higher density housing. In this sector, it is still incredibly strong and tight, especially not only in Adelaide, but also Perth and Brisbane at the moment. The RBA meeting is not that far away. Everybody is going to be very curious as to what the RBA might do. Probably in many ways it might be just a little early, but there might be enough signs for the RBA to go into maybe increasing the cash rate. How do you see that?
The outcome is inevitable. The question mark remains around the timing of it. I certainly, when I speak to clients, when I speak to investors, when we work numbers, we absolutely factor in interest rate increases over the course of this year. And what's happening currently internationally and in the last few hours, to be honest, is certainly speaking to in that direction. So we are expecting it to happen. As you said, March might be a bit early, but throughout the course of this year, it seems inevitable now.
One of the sectors that you're quite deep in is rent vesting and helping investors get into rent vesting. Hasn't this, in terms of talking of mushrooms, boy, this is blowing up, hasn't it?
It certainly has, which I think is circumstantial. I suspect it's more by necessity than choice, despite the fact that in many circumstances it is the best choice and it should have been entertained regardless of the necessity. But yes, we are speaking to many, many more younger people who are finding that this is essentially the only way for them to go. And I'd like to reassure them when I speak to them, and I would do the same with your listeners. Not only is potentially the only choice, but it is almost every single time from a financial perspective, the best choice.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs, and hidden gems.
Well, since we mentioned the Middle East, one of the problems for the thousands of Aussies living in Dubai at the moment is the latest talk around desalination plants. Some think that Iran is going to target them to create even more chaos in the Middle East. Now, these desalination plants, if you didn't know, they are the survival mechanisms to supporting life in the UAE. And just for context, here is one commentator talking about just how much of a problem this is and what the Iranian new leadership might have in mind.
My sense is that we're going to see more escalation from the Iranians. I mean, the regime is hardened. It's united. The security services are united. The Revolutionary Guard Corps is definitely in charge. They have a very aggressive and, forward-leaning leader now in Mujtaba Khamenei. I think that the thing that worries me most is if they go for what I would call the nuclear option, which is not a nuclear bomb, but rather they try to attack the desalination plants in the Persian Gulf and on the Red Sea. If they knock out the water desalination plants, it would mean that, large cities with 7-8 million people like Riyadh, we're already seeing this problem in Bahrain, by the way, because a desal plant there was attacked. Large cities don't have enough water from the aquifers to sustain themselves. And you would have a real kind of crisis in the kingdom, in the UAE. Dubai wouldn't survive without desalination. And you would have a major problem for these countries. So if we start seeing desalination plants being attacked, then really all bets are off. And it's an all-out war. And I suspect that it would require ground troops to bring down the regime in Iran.
Yeah, so that is a serious problem when it comes to desalination plants. Let's get back to some more real estate news because new data shows that the Gold Coast is now overtaken both Sydney and Melbourne to become the most expensive place in the country to rent a house. The median weekly rent in the Gold Coast is sitting around $950. That is well above Sydney at $810 and far higher than Melbourne. So that is a reminder that lifestyle cities are now competing with the traditional big capitals when it comes to housing costs, especially as population growth continues to push demand and push it pretty strongly. Now, as I say, Perth has become Australia's strongest performing capital city property market over the past 5 years. Just to throw up another stat here, home values have climbed around 98% since 2021. That is huge, isn't it?
I know it's been an amazing few years over here in Western Australia where Perth has really gone from one of the weakest capital city markets after the mining downturn we experienced to arguably the strongest performer in Australia. Looking at what's driven that, it's probably a combination of strong population growth, really tight housing supply, and relative affordability when compared to the rest of the country.
Good point, because one of the biggest drivers behind Perth's property growth is that population. And this, of course, is after years of population losses. How quickly we forget that you were in an area that was losing a lot of people following the mining boom. The trend is now reversed and the housing demand is back, well and truly.
Absolutely. Since that mining downturn, you're right. Everyone was leaving Western Australia, but now it's totally reversed. And look, interstate migration, overseas migration, mainly due to the jobs in resources and infrastructure that we've got. The catch-22 of that has been that supply hasn't kept up. Building slowed through that period as well, and construction costs have increased through the roof over that time, plus which has had an adverse effect on our planning pipeline. So there's simply not enough homes for the people arriving at the moment.
We talk about the people moving in. Many buyers are young migrants or first home buyers. They're looking for homes under the $850,000 mark, becoming increasingly difficult. No doubt that's something that you're having to deal with on a daily basis.
Absolutely. The first home buyers, the migrant families coming over here because they've got secure employment, not only for now, but for the future in resources and infrastructure. What we're seeing there is they are in competition with investors, interstate investors coming into the marketplace as well. So enormous pressure on trying to find a suitable home for less than $850,000. So what we have seen is extraordinary growth in regional centres throughout Western Australia as those migrant population looking to relocate to those regional areas to gain affordability and, as you say, a house instead of a small unit.
And of course now we've got those extra costs that might be kicking in as a result of our friend Donald Trump and this war in Iran. Nobody's going to get out of this without having to pay more.
No, it's absolutely ridiculous, isn't it? When you see the lines at fuel stations and the like, already the cost of living had gone through the roof in the last couple of years. So putting added pressures to that household budget, which no doubt will have pressure on, purchasing ability of some of the buyers out there.
And here is a fun fact from the 1990s. A typical house in Sydney could be bought for around $200,000. At the time, many commentators warned that the market was overheated after a strong run in the late 1980s. In other words, they were saying, oh no, that's a lot of money. You could get burnt. But no, that wasn't the case at all. It is a Real Estate Friday working into the weekend. We are in Perth talking to Travis Coleman. He is the head of WA for Bell Property. If we could go back in that time tunnel and secure some of those Sydney homes, for $200,000, which you got to ask the question, if that was the price in Sydney, the price in Perth must have been considerably cheaper.
That is amazing statistic, isn't it? $200,000. My God, that'd probably get you the letterbox these days. Over in Perth for a similar property at that particular time, I can tell you, I know people who have bought properties for $50,000 in Cottesloe, which is a premium suburb over here, now probably worth circa $3-4 million. It's absolutely amazing, isn't it?
Yeah, for sure. Tell us a little bit about what's going on at the moment with some of the clauses in these contracts. Are people negotiating a little harder, or is it still pretty hard to get some of those terms that you want in contracts? Because, as you said at the top, they're only lasting a week, so there's probably not a lot of room for negotiation.
No, there's not. And what we're actually seeing is highly competitive pricing. Of course, people are given multiple chances to increase their offer. But what we're seeing there is a limited number of special conditions being put on contracts. A lot of the heavy lifting or due diligence is falling on the shoulders of the buyers to make sure their offer, when they put forward, is as clean as possible so it can be as attractive as possible to the owners. Because when faced in a situation of multiple offers being presented to the owner, you want to make sure yours is the easiest and cleanest to deal with, and it's obviously an attractive price as well.
We connect you to the best real estate information across Australia. The Real Estate Podcast.